Joining us now is Venture Global CEO Mike Sable. Mike, nice to have you. Congrats.
Great to be here. Thank you very much.
How do you differentiate your company from competitors such as Cheniere or Freeport, which is a private company? In reading the S1, it seems to be in part the way that you actually manufacture and construct your trains in terms of a different way and perhaps more speedily. Is that correct?
No, that's correct. We're the first ones ever to shrink the size of the liquefaction train to where we can build it in a factory. And it's originally how my partner and I, Bob Pender, were thinking about it, is really Dell servers with AWS replacing IBM mainframe computing. And that actually was part of the conversation that we had way back with Jeff Immelt 14 years ago.
Does that enable you to do it at a cheaper cost? And I wonder, so many of these things still have cost overruns. You manage them in a way that perhaps your competitors don't as well. Is that fair to say?
Yeah, we think that we're by far the lowest cost liquefier in the world. And it's an exported gas market, so it's a commodity market. So having low cost is key to rapid growth. And I think we're one of the fastest growing energy companies in the world right now.
You are in arbitration with a number of your key customers. I think 7 of your originals, including BP and Shell. Trying to understand it myself, but it seems as though they claim that you're selling at a much higher rate right now and not honoring their contracts. What do you tell people about that arbitration in terms of why you think it's not going to be perhaps a threat to your business?
Yeah, it's not. We're absolutely consistent with all our contracts, and we use the same contracts that the entire industry uses. They're all dictated by the project finance banks. When we complete Calcasieu Pass, which is the facility that you're talking about, will be the second or third fastest facility that's ever been built. And our primary regulator is FERC. And FERC has said we're not in service, we're not complete, and until you complete the facility, we're generating commissioning cargoes. But because of the unique way that we produce our liquefaction with our modular trains, we produce a lot more during construction than anybody ever has before. All those customers know that, and ultimately they'll enjoy all 20 years of those contracts, and they haven't lost any money at all.
But right now, you're able to sell at a higher price than under those contracts.
That's correct, because we're not complete with the facility.
So what happens when you do? Does it then bring your profitability down?
Well, we have another facility coming right behind it that's twice as large. And then, in fact, the third facility, we're taking delivery of our liquefaction trains the end of next quarter. And so we're ramping up, again, the fastest in the world. And with that facility, with the largest producer in the United States and second largest in the world.
Ultimately, what does that mean for financials? Because I know you said that you're among the fastest growing.
We are.
But I'm looking at your S1, and I see in the 9 months through September that revenue declined. That amount came in about half the amount that it was in 2023. Same too with the bottom line as well. So by what metric are you growing, and when does that filter into actual financial growth?
Well, what you're looking at there is when you put trains in service under GAAP accounting, you switch from income to actually accruing and net the cash earnings as just reduction in the capital cost of the facility. So the cash earnings were ramping up, but the accounting treatment as you're turning the facility on changes. So the steepness of the cash earnings is actually significant.
So then what are you projecting for this year?
We have significant earnings growth. We're going from operating 18 liquefaction trains on our way to 54, on our way to 90. And so as you turn on a train that produces a commodity, you earn a lot more money. Ultimately, our business is that we manufacture and operate machines that produce money, manufactures a commodity. And gas is one of the most important in short supply commodities in the world right now. And with the investments in data centers, a lot which is going to have to be supplied with growth in gas-fired electricity production, we're in a very key position.